Hello everyone, this is Teddy Keckstead from Forex Trading Unlocked, and it is February the 7th, 2020, and we are here for a daily Forex market breakdown for you. Before we get into the analysis, we're going to just pull up our disclaimer real quickly, just to remind you that this video is for information and educational purposes only. With that, we're going to jump to our live screen here, and we are already pulled up the www.forex-trading-unlocked.com website, and we already hit the workstation tab on the menu bar to pull up our workstation page. We're going to skip over the numbers for the day. Most of them are out already. We are already 2 hours into the US stock market trading session. So the currency markets have now only less than half a day left in them. So the dollar index has been surging again this week. As you can see, the euro US dollar has definitely been impacted by it. Now, currently, the euro US dollar is hovering just above its lows. It had retreated back and wasn't necessarily bullish, was definitely positive on the day, but now the bears are definitely grinding back on support. So the key thing to remind you about the euro US dollar is that it is Friday. So what are the fundamentals and the technicals to look at? Well, technically, we have two pivots here. We had the last swing lower move high here at $1.1096. Unless we get a breach of this, we're going to stay in a bearish forecast. So I would say for bulls, unless you get above here, you are in a very, very tough spot. Yeah, would be careful trying to catch a falling knife here. For bears, this would be your level to sell against. Anything short against $1.1096 keeps us in a bearish mode. Anything above here, you don't want to be short, because a rally above this key pivot here would have us in a neutral to higher posture and take us off of the bearish campaign. Now, this market has been breaking since the first of the year. We had a head and shoulders here. This was the head here at the end of the year. Here was our shoulder, this first lower move high, swing high. And then here, when we took out the neckline, as you can see, we continued the slide forward. We had this last corrective rally that now we have fallen off of, and now we have hit our target for the head and shoulders. So the question is, technically, what do we have here? Well, we have an exhausted target already for the euro US dollar, downside target from the head and shoulders. Is that now we are in a bear market for short term and medium term for the euro, because it has been trading lower now for over a month. And now we're looking to see how far it can press support. Now we are coming into this key zone for the euro, where from basically right where it's at here at 109.5 down to 108.5, it seems to always find support no matter what's going on in the world geopolitically or what have you. However, dollar strength right now, I think, is more influenced by the corona flu virus. We are going into a weekend. That's what you have to think about, is that where are currency traders putting their money, or where are they getting out of positions? Right now, if you're going to be long a currency, it's probably going to be the dollar or the Swiss versus most other currency crosses. Those are flight to quality currencies. The yen would be another one in Asia. So we're going to see how this is shaping up. Brexit is over. We have the EU that's also going to have a trade war with the United States. That is going to weigh heavily on the euro. So we have the coronavirus, we have the potential trade war with the EU and the United States, and then we also have the issues with Italy, and also now a couple other countries in the EU. So these are all heavyweight fundamentals that are bearish to euro currently, and especially going into a weekend, it's I mean, anything could happen. We could gap open higher and have a big rally. Maybe they find a cure to the coronavirus, but if we don't, odds are is that the markets will weigh heavy as the numbers for the coronavirus continue to escalate. So not that we want to be trading on that fundamental, but we have to be aware of it. So if you are bearish, once again, you are good below this $1.1096, and especially below $1.0979 right now. We are looking for a test of this lower parameter down to 109 even to 108 half. We are not giving any really longer term extended targets, because the fundamentals, except for the coronavirus, which that's not a reason to just base your trading off of, is trading the virus. But there are fundamentals that are weak. But the dollar has been in a rally for quite some time. If the dollar gets a correction, it's very likely, since the euro is the major currency versus the dollar, and just like the pound is, the pound and the euro are the two top ones versus the dollar, the euro being the most heavily traded. It would be significant if there's a turnaround in the dollar index versus most currencies. That would probably give a little bit of a break for the the bulls, or the bears rather, and the bulls will probably take in get a little correction going. So I'm not bullish in any remark. Any way rather for the euro US dollar, except for corrections right now, and right now we're not even thinking about that as we go into the weekend. So let's look at the British pound US dollar. This market had been holding up pretty good against the dollar the earlier part of Friday. And as you can see, the range isn't that big, but it's hanging on its lows. So this last swing high looked like we were going to break out of this range finally after Brexit had occurred. Not so. We came back and then we made a new low. So here we have a higher move high and a lower move low. So what does that mean? That means a lot of sideways to lower right now. So we're going to keep on looking at support being tested. We had this key pivot here at $1.2758. This is the low that has kept the consolidation pattern here for months, as you can see. As a whole, this market has been a bull versus the dollar. It consolidated going into Brexit, but still was a bull. But now, because of the coronavirus, it seems to be leaking in here. I don't think that the trade agreement issues with the UK and the US is going to be too hard, because in lieu of the fact that the EU has to deal with the UK has to deal with the EU, I think you're going to find a trade deal between the UK and the US before you find one between the US and the EU. It would benefit the UK. They have enough chaos going on and they just want to move forward. So I would be careful being too much of a bear with this one currency. The euro US dollar, I think, is one that's going to be hard to become a bull for a while because of the fundamentals, even though the technicals are looking to give you a buy. So I think you might be grinding lower and have to wait for a little subsiding of the fundamentals that are impacting this trade. But the pound, it just seems to be very resilient. It's not really hitting support hard. It's just slowly grinding lower. So I would be very careful if you're going to be short. You don't want to be short against this $1.3204. Anything above here targets $1.34 even. And if you're a bull, you definitely don't want to be long above a dollar or below $1.2758, because this market is going to definitely start to tumble and fill in this range here as it starts to become a bear, because once you have lower move lows and lower move highs, this market is a bear. And that's something you need to look at. As we made this high back here in December, we came down, we set this higher move low, and this set the tone for the range for the pound for the next month and a half, 2 months. And now we've been trading sideways, and then recently we made a higher move high, now we've made a lower move low, and we just took out, let's see, the low of this low was 129.047, and we have a low of 129.032. So we did it today. We took out this low. So here we had a higher move high, higher move low, lower move high, and now a lower move low. That means we are in a neutral to bearish posture. We're looking for a test of this $1.2758. So for you aggressive bears, or your bears that are already in it, I think you're safe. You're going to get a nice shot at getting at least close maybe to this $1.2758 before you get a bounce. But be very leery if the dollar index takes us even the slightest correction back to the downside. Remember, the dollar index before this coronavirus started to really inflame over the past few weeks was in a corrective rally, but in a bearish longer-term trend. Not so now. Right now, it's very interesting what's going on with the dollar index. And since that little segue is there, we're going to go to our first flight to quality currency that we're going to look at, which is the US dollar Swiss. So we are bearish to euro US dollar, we are bearish to pound US dollar, but not so much. The US dollar Swiss, now this is an interesting one, because the Swiss is a bull against most of the currencies and has been for quite some time. While everything is correcting versus the dollar to the negative side, the Swiss has a little bit, but as you can see, it's pretty much consolidated. Like on the year, here is December 31st, where the market closed at 96.71. Well, the market's trading at 97.75 right now, or 97.75, so it's not that much. It's just a little over $1 higher for dollar strength. Now think about this. The dollar index has been rallying since the first of the year and continues to do so into the past few sessions, but not here. So there's no strength in the dollar versus the Swiss. Slightly, and I think because we're going into the weekend especially, you're getting it. But as you can see, we have this parity orange line up here. This dollar, no matter what, no matter how strong it has not been able to sustain a trade above parity. And the closer we get to, and as you can see, the ranges are tight. This market has been trading much more volatile and bigger ranges than the euro. All of a sudden, the euro US dollar is getting some trading ranges, and this one is tightening up. The Swiss is the flight to quality amongst the European currencies, the pound and the euro, and especially coming into weekend trades and even with the coronavirus. But against the dollar, the Swiss is still still weak, excuse me, but not that weak. So this pivot here on this last swing high, now look at this, we set a low here in the middle of January. We've rallied since then. This is kind of like a little head and shoulders here. We took out this neckline for head and shoulders. Let me show you where the neckline is here in case you're not following me here. So we had this and this low right here. Oops, let's pull this out here. Okay, so that, and we're going to change the color so you can see this a little bit better. Okay, so as you can see, we set this low here. This would be the head for the reverse head and shoulders. Then we came here, we made a higher move high after having made a higher move low. That made us neutral. Then we broke down, we made this lower move low, and now we've made it exploded to higher move highs. So at the same time, while we're making higher move highs and higher move lows, which is bullish, today we have crossed this neckline here for the reverse head and shoulder. Here's the second shoulder, here's the head, here's the first shoulder. You can see the neckline. We are above it here. So now where does this put us as far as how far can this trade go? Well, most likely when we're looking at a rally up into this 109 area to 109, or excuse me, 99 even to 99 half. There's going to be an incredible amount of resistance most likely around this parity level. Unless this coronavirus really starts to like escalate in crazy numbers, and especially hits the US and starts to explode in Europe, I think you're going to run out of gas before you can get to parity. The Swiss strength versus the dollar just is there. It would only be some sort of fundamental, not technical, that could push this up, because the dollar just seems to be getting that boost because of flight to quality. And if you look at the Swiss, versus other currencies, we can look at the EURCHF, and this will give you a perspective on what we're talking about. Here's the Euro Swiss. You can see it's been trending lower with the Euro being weak against the Swiss. Even though it's positive today, it's just basing and kind of slide. It's not very strong. Now we're going to look at the pound versus the Swiss real quick, and this will make a little more sense too. See, this looks a lot like the pound US dollar chart, doesn't it? But it's still grinding lower and sideways to lower trade. We've made a lower move low, lower move highs. This one, even though it's creeping lower, it is bearish. So let's go back to US dollar Swiss. So as you can see, the Swiss is losing ground versus the dollar short term, but long term it has more strength. It is the number one flight to quality when you're not talking about something like this virus that's going on. When it comes to geopolitical stuff, whether it's oil moves, wars, whatever, the Swiss franc is typically a flight to quality. Right now it's losing some grounds, and we have these fundamentals. We have a reverse head and shoulders that now has just been triggered. We're targeting a rally up to this 99 even, the 99 half area. That's longer term. That's probably going to take a week and a half to 2 weeks to manifest. We will probably be into March before we hit that target, just because volatility is very tight. You're not going to get the range. It's going to take a while. Even if the dollar has big surges, the Swiss will not most likely surge that way. So now let's look at the Asian flight to quality currency, which is the Japanese yen. Now the US dollar yen has been in a rally for quite some time, and no matter what, it's having trouble with getting through resistance, but it keeps on popping through it. So we're looking for, even though it's lower today, this trend, no matter what the dollar index does or the dollar does, is the yen is flight to quality versus other Asian currencies. But right now versus the dollar, no matter what the dollar index does, it seems like the dollar is strong versus the yen. We're looking right now for a challenge of this $10.31, which targets $1.12 up to $1.12 half. Or 112 half. Any trading below here is going to be buffering. It's going to be a grind. If we have a sell-off, as you can see, we had made this low here. We made this higher move high. We've now finished a correction, which was a higher move low, and now we're falling just short of that previous higher move high. We are in a bullish forecast. Only a failure at 108.28 here would take us off this bull and have us in a neutral posture, and then only a failure from this lower point here at, what is this, around 107.673. That would definitely reverse all the gears. But for the Asian currencies right now, the US dollar yen, no matter what the dollar index, I would be cautious. Being a bear, I would look for maybe some, if you're going to wait for newer move highs to sell into before you play around with this, because you can see that the bullish action explodes. So if you're on the short side, keep your risk tight, because you got to if you're going to expand your risk, odds are it's going to be against you and you're going to lose money. So that's just the odds, not my opinion. All right, now we have the Australian dollar, US dollar. This market here looked like it was trying to make a bottom a few sessions back. It came back, it made a lower swing high, and now today it collapsed again. Now this is another one where the fundamentals are just slamming this market. Australia just cannot catch a break. First, there was the U.S. trade tariff war that started to slow things down for them because they're a major supplier to China. Then you have the Australian wildfires that are still going on, which is just an absolute disaster and catastrophe. It's very heart-wrenching for what's going on for the whole continent of Australia and the Australian people. And then we have the coronavirus on top of it, which is now slowing down China trade and also access to trade between other countries in China. And that since Australia has almost all their eggs in one basket being China, this is just fundamentally a bear for them. Technically, they've exhausted the downside, but if you look at even you could look at this here from this last high, which is the top here, which was at the end of the year. We came down, we made this low, higher move low, then we made a lower move high, confirming the bull market was on neutral. Then we took out this low, making lower move lows down to here, where it looked like we wanted to have a nice base a few sessions back and get at least a little bit of a correction. But as you can see, we rallied back up. We made this lower move high, and now the past two sessions, with today making newer move lows, this market is just a bear. And then going into the weekend, because of the virus fears, I think that since they're so close to China, it's really hard to be long this market. I would look for rallies to sell. Normally by now, this is a fifth wave down, and this market had been a really good bull, but now it just doesn't seem to have any reason to find support. And even if there's a turnaround in the US dollar and it starts to correct, I think Australia, unless we have some sort of reprieve on the virus, which will help them out because they need some help. I mean, this had a head and shoulders here that we already hit the target. We're in the bottoming area technically for this currency, but fundamentally it's really hard to become even a short-term bull. I would look for rallies to sell unless we have some really good reason to take the coronavirus and other things off the table. Otherwise, I think you're going to be hard pressed. It's going to be good for range traders and bears. Bulls, I think, are going to have a really tough time with this market. It's just going to be really, really tough. And I would actually look, especially because if we are going to have some sort of global slowdown that hits us come 3, 4, 6 months, 9 months out, especially, if we catch a nice rally in the Australian dollar, it might be a really good opportunity to get short and then get short for maybe upwards of 6 months. We're not looking at a short-term trade here. We're looking at a fundamental. This is where some of your lesser currency crosses, you can start to catch some really, really nice trends. So we'll be looking out for that. And another reason to support this idea is we have New Zealand dollar, which is also in that trade zone. They fell through a key pivot today. This is a big deal. Now they're coming into a consolidated area where they could find support. I mean, you can always find support anywhere, or resistance anywhere. But this market had been a raging bull against the dollar, no matter what the dollar was doing, especially even when the dollar was railing. And then this month happened, January happened, it got the correction, but then it consolidated. As you can see, it looked like it wanted to base. Then we had this gap lower, and we haven't looked back, making lower move lows and lower move highs. So this 65.05 here, this is our breakout to the upside. We have our 64.53, which is our upside downside bias. Anything below here, we're definitely keeping this market in a bear posture. Above here, it's neutral, and only if it can get above 65.05 are we going to take it off the bearish campaign. Now, no matter what, we had come off this higher move high. We have been making lower move lows and lower move highs in a kind of choppy, smaller wave theory way. However, we still are, if you look at it, this market had been trending higher. We could be coming into the base, and then all of a sudden we get this rally that comes back. Now remember, New Zealand dollar, New Zealand doesn't have the wildfires that Australia does. They have the coronavirus. Their trade issues are not quite as tied to China as Australia is. They have a little bit of a they're in that trade zone. So I think that if we do get an uptick in reprieve from the virus, this market will bottom much faster than the Australian dollar. So this is going to be tough. Right now, you got to be a bear against 65.05, I think, and definitely below 64.53. If you're a bull, I think you're trying to catch a falling knife, and you're just going to take a lot of heat or to have definitely just chop yourself up. So I'd be careful with that. And then, like I said, just wait for a buying opportunity because of information that we Now let's get to the US dollar, Turkish dollar, and see what's going on over here. We had a breakout to the upside. We've been buffering resistance for days. This market is an overall bull, and that 598.76 pivot here, this is your directional pivot. All trading above here keeps us in this rally mode. We see this market continuing for months. Any correction such as this one here, we look as only a downside correction to buy, as this bull trend it will most likely maintain for months on end. We're looking for this one actually to possibly be a bull for the whole year of 2020. Just because it's one of your lesser major currency crosses, and even especially with the way things are going right now in the short run, this market has very few reasons to sell off. So if you're an aggressive bear right now, I think you can be short against the high of today and looking for a corrective move, but I would definitely not want to be short above the high from today. And if you are a bull, I think you're in a good spot, but you could still see a little correction. So anything above 583, it's a pretty wide range here. So if you're not already in this trade, it's really tough. I would say if you are a weak bull, or at least if you're trying to buy into this, and if this trend, the momentum is pretty strong here, if it gives out and we get a chance for a correction in this 596.12 area, we take this out, we could see a nice buying opportunity somewhere in between here. Where, I don't know, it's tough because right now, like I said, this is just a bull no matter what the dollar index does. All right, now let's go to the North American currencies. Now we know that the U.S., Canada, and Mexico have re-signed and overturned NAFTA. The Mexican government has already signed their thing. We're waiting on Canada for the final completion. There's a lot of pressure in Canada for it to be signed by the Prime Minister. As you can see, the U.S. dollar has been rallying against the Canadian dollar for the whole month of January into February, just like most currencies. However, this market has been, over the long term, been a slow creeping bull, or bear rather, with big strong corrections, bullish corrections, but then they fail. This one right here, this is the biggest correction we've had here. This was symmetrically kind of breaking like it had been for months, falling off these corrections and then grinding through lows a little bit, basing, and then getting a little bit of a correction. However, this one, if it would have been technically perfect, it would have already run out of gas around this $1.32 to $1.32.5. The fact that we're above it, consolidating and inching higher towards breaking out to the upside at $1.3328 gives me reason to believe that as long as this dollar index and the dollar is strong, it's going to continue to rally versus the Canadian dollar. Remember, this was a bear right now until the deal is signed with Canada, and also because of the coronavirus, I think you're going to see the dollar, the US dollar Canada, remain in a bull. Is it ripe for a correction? I mean, the velocity of the slope going up is very steep. A correction would be very, very good to base before the rally continues, or to start a turn back on and bring the bears back. But I don't think you're going to have, unless you have a big sell-off in the dollar index, a return to support testing. You're more likely going to grind higher and break out of this $1.3328, and then we target this $1.34, even up to $1.35 even, escalating the velocity of this current rally, which would mean it's no longer a correction, it's a full-blown bullish turn. Now, below this $1.3328 pivot, we're in neutral choppy territory down to $1.3154. See, the velocity of this rally has been so steep that we have a wide range here on this because of what the amount of distance that's been crossed over the past month. So down to here, it's going to be a choppy neutral trade. Only a failure from $1.3154 takes us off that bullish forecast and makes us a bear. So now, since we talked about the Mexican peso, let's get back to that. And as you can see, this market's been in the bear for quite some time. For all you tourists that are looking to go, or the college kids that are looking to go down to Mexico for spring break over the next 2 months, it's going to be a little bit more expensive than it was last year. Every bit of 10 to 15%, actually probably upwards of 20% more, depending on the exchange rate that they get. Since they're college kids, my guess is they're not being too astute on where they're getting their conversions. But then I guess you can also use the dollar down there as well. Let's see. So we had an inkling of a potential bottoming base here a couple weeks back, and we made another lower move high. Then we made a higher move low with a lower move high, which kept us on the neutral bias. And then this week we fell apart and we made another lower move low. Today we're a little higher. However, lower move lows, lower move highs, what does that mean? That means fundamentally the technicals are bearish. So anything below 1898 pesos here, we're a bear. We're looking for this market to continue to test support, and a failure at 1856 just confirms the grind lower. I mean, look at this thing. The trend is lower. Don't try and catch a falling knife. You know, every time it did here, boom, it came through and fell apart and eroded more. So dollar strength is keeping this market up. Now, ironically, the dollar is bashing all your major currency crosses. Then here you have a lesser major currency cross where the US dollar is in a free fall, you know, so you never can tell where the markets are going to go. You can't just put them all into one spectrum. I keep referring to the dollar index, but that doesn't, the dollar index is a guide. It's an indicator just like anything else. And for as far as these currency crosses, if there's any strength in the dollar, it's not here in the peso. At least that's the way it's looking right now. So before we end this video, we're going to look at the euro US dollar one more time. Right now, this market is, just like we started this video, it's hovering just above the lows. So we're here at 11 o'clock Chicago time. There's only 4 more hours of trading for the stock market. Currency market shut down in 5 hours. And I think that right now the bears are in control unless you have some big news that comes out sometime between now and the close. I don't think you're going to get a really big bullish bounce. Maybe you get a little bit of a rally from where we're at, but I think this euro US dollar is going to settle lower. So we see where we're at coming into the lunchtime trade. Remember, most of the markets are closed around the world. Most of the traders are gone. It's only the US that's pretty much left as we're heading into the afternoon session and the end of the trading week. So if you're not already in a trade, don't even bother, I would say. That's what all pros would tell you. Stay away. And then evaluate this weekend and come back on Sunday or Monday and jump back in the water. So, and that is all we have for today. However, we are looking at some potential buy and sell signals. And if you want to learn about buy and sell signals, besides subscribing to our YouTube channel, which you should do so you know when we come out with these videos, on any page on our www.forex-trading-unlocked.com website, if you toggle all the way down to the bottom just above our disclaimer, there's a big little picture here of a book called High Probable Japanese Candlestick Patterns for the 21st Century Online Traders. This book will give you the top Japanese candlestick patterns for buying and selling and continuation patterns, and it teaches you how to integrate them properly. Most people who have tried candlesticks have failed. Most people even say the candlesticks are impossible to use and they don't work. I'll tell you why most people say that, because they're using it intraday, and if you're using it intraday, well, yeah, you're right, they don't work. I mean, they do sometimes, but the percentage chances of them working, actually, the probability is 50-50 at best for even some of the best signals, really. But once you expand out to longer term time horizons, however, the daily, the weekly, and the monthly, totally different story. The percentage chance of them being coming through and being profitable and being correct increases dramatically depending on the pattern. If you want to learn more about it, read the book, High Probable Japanese Candlestick Patterns. It's available on Amazon.com on Kindle and paperback version. You can either buy it here, you can share it here, or you can preview it here and get a taste of what it's all about. So remember to always come to www.forex-trading-unlocked.com for all your Forex information, to hook up with Forex traders and get really good information as to what is truly going on in the Forex markets. And with that, I want to thank you very much for your time today. You have a good rest of your trading week, and hopefully it's been profitable for you, and get your rest and then come back on Sunday, Monday, and hit it again and hit it well. All right, with that, thank you very much. You have a good weekend. Take care.